What's going on, guys? Welcome back to another video. In this one, we're going to be going over exactly how you guys sitting at home right now can make some money potentially off of the 2024 presidential election. We have a lot of information to cover here, and in times like this, we always have to have a really good thesis. Now, I will tell you, this is very similar to when I called the top in the bond market the day before the last FOMC meeting. So again, we have a lot to cover here. We have to break down exactly what the market's expecting right now, how that is being reflected in markets, and what we could see in the days and potentially weeks following the presidential election. So before we get into all of that information, everybody, if you guys wouldn't mind dropping a like down below, costs you nothing to do it, helps me out a whole lot, getting this information out to as many people who actually want to learn. So let's start going over some of the data here. Well, I have the chart of the US 10-year Treasury yields right now, but that's not necessarily as important right now until later. So looking at DJT right now, this is obviously what a lot of market participants are using in order to get a gauge of what they expect for the outcome of the 2024 election. Now, what I will say as well, you guys see this trade setup right here. This is a setup that I gave my private community, my Discord, going into this election here. This trade ended up running I believe to a height of about a 1 to 48 risk to reward. Now, guys, you guys all know this by now. We have the best trading community in the game. You guys see it in the success all the time on Instagram, Twitter, on the trades that I take every single day. If you guys are interested in hopping in there, I am offering you guys a 50% off your first month sale with code BULLISH. It literally comes out to $1 a day. You get both the courses, the Day Trading Mastery course, the Swing Kings course, the watch list of stocks that are about to explode every single week and day as I update them. You get the pre-market plans, the macro research reports, single stock research reports, everything. But again, that sale is coming to an end soon. Then we're going to go private, completely waitlist only, and nobody else is going to be able to get in. So just going back to this chart right here, even though this was an unbelievable trade, what this is telling us is that the market is expecting Trump to win. Now, when we see this aggressive move to the upside here, again, if you think about DJT, it's an absolutely terrible company. There's no reason why this stock should have went up. I mean, this is like a 2.5x, I believe. Let's see here. This went up about, what was it here? 229% since the entry that I gave out. Now, the thing that we've been talking about recently is it actually makes more sense now to short DJT and buy calls to hedge it. But right now, again, not a lot of people are going to be able to do that. But what does this tell us? The market in general is pricing in a Trump victory. When we also come over here to Poly Market, we're seeing the exact same thing. How accurate is this? I don't know, but it is being reflected in some of the other metrics as well that we can easily take a look at as astute market participants. The next thing right here is going to be bonds, and this is where things get a little bit more complex. So when we think about the bond market and what has occurred in the bond market over the last basically month and a half here, we saw a very, very significant and pronounced bottom in yields and an absolute rip your face off rally in yields and a drastic sell-off in bonds because, again, bond yields and bond prices are inversely correlated. So when you see bond yields go up, bond prices are going to be moving down. Now, if you come back to this tweet that I made the day before the last FOMC meeting, way too many people are bullish on bonds right now. The market is currently pricing in 200 basis points of cuts through Q1 of next year. In order for bonds to move higher, you need the market to price in even more cuts when the expectations are already way too aggressive. TLT at big resistance as well. The long bond trade is too crowded. Be careful. This was the literal top. Now, why was I saying this? Well, obviously, as you can see here, the market pricing in an aggressive amount of cuts when they don't actually need to, obviously, is a part of that thesis. And once we start to see that first cut, it's almost like a buy the rumor, sell the news event. But what we also have to think about here too is what is actually going to be occurring in the next administration. Because again, we saw this event take place in the middle of September. Then we start to get into October where everybody is now thinking about what the outcome of the election is going to be. We saw this drastic move up in yields here. And to me, the movement in bond yields is not solely due to the pricing or the expectations from the market for what the Fed is going to do next. Here's why. When we move over to the Fed Watch tool right now, we are currently still pricing about 100 basis points of cuts going into the end of the year. Now, prior to the last FOMC meeting where we got that 50 basis point cut, we were pricing in 125 basis points. Going from a full 2024 basically a cut of 125 basis points to 100 is not even near enough to move treasury yields the way that they have. So why are they moving? And it's very, very, very simple. When you take a look at the overall economic plans from both candidates, either way, they are going to go into even more debt. They're gonna issue more debt, then they're gonna spend more. That's what it looks like right now. Then, if you then see that the market is expecting Trump to win, and you see the former president has rolled out a series of targeted tax breaks, including eliminated federal taxes on tips, Social Security benefits, and overtime pay, and also extending the already existing Trump tax cuts that are supposed to expire very soon. Well, when you take a look at, let's see, this chart right here, and you take a look at government spending versus government revenue, well, obviously, this government revenue number is going to go down, and it's going to increase the deficit, meaning that the United States Treasury is going to have to sell even more bonds to raise even more money, to go into even more debt, in order to keep this party going. So if you have more supply in the Treasury market, well, obviously, it's going to bring bond prices down, which is one of the main reasons why you have seen the aggressive movement in the Treasury market. So just to tie this all together very, very, very simply, we saw that initial spark in the Treasury market due to the buy the rumors, sell the news event happening at the last FOMC meeting. And then as the market started to price in I don't want to call it a landslide, but you look at those the betting odds and what's happened with DJT, the market in general, a lot of things are pointing to a Trump victory. Then you look at what Trump wants to do. What is that going to do to the fiscal situation in the United States right now? Well, obviously that could lead to higher yields. So at this point in the video here, you might be thinking to yourself, well, if that's the case and that's what the market's expecting, we might as well just go along with the market, right? No. That is not what you want to do in almost every single case, especially as it relates to the bond market. What the bond market has shown us many, many times throughout this year, I've made some pretty awesome calls, honestly, in the bond market this year so far. You guys saw the recent one back in right before the FOMC meeting, and this is also why I said that this potential trade idea is very, very, very similar to that idea that we had right before the last FOMC meeting. Why? Well, obviously, the market is aggressively pricing in a Trump win. Now, what happens if he wins? Well, they are sort of at this point discounting that government efficiency committee that Trump has hinted at releasing with Elon Musk. But honestly, for the purposes of this video, we don't know to what extent that's actually going to be enacted or what they're going to accomplish. So I really don't care. And for the purposes of this trade, it's not really going to make a difference. But what could happen is a very similar snapback that we saw right before that FOMC meeting, that yields start to move back down as the market realizes that they priced in too much into the bond market. Now, on the other side, if Harris wins, you then have to price out all of these Trump victory moves that we've seen in the market here. So if you no longer have to worry about those Trump tax cuts and increasing the deficit supposedly even more, well, then a lot of this movement in the bond market could easily get reversed, and we could see the 10-year move all the way back down to that 4.14% area. So how do we actually take advantage of this move here? Well, we would use what are called options. I know a lot of you guys are familiar with that. We'd get short dated call options on TLT. You can do it on TMF as well, but it's going to be a little bit stranger because those 3 times levered ETFs have a lot of decay. So when you buy options on those 3 times levered ETFs, you're effectively buying the derivative of a derivative, which I personally don't like to do. Or you could actually go out and buy shares of TMF. Now, if you guys are in the futures market and you have enough capital to deploy and you're able to swing trade futures, you could go long ZB. Now, I'm going to tell you guys this right now. I don't actually know if I'm going to put on this trade. If I am going to, it's going to be on Monday. And obviously we're going to be talking about this with the Discord a lot over the next coming days here, but this is not something that I would be putting a lot of capital behind. Just because you're going into an election. It's a pretty binary event, and I quite honestly could be wrong. It's very possible that I am wrong in this thesis in my analysis here, and bonds end up continuing lower. In either case, after the election, just based off of what everybody really realizes right now, which is inflation is here to stay. The government's going to continue to go into more debt because they're going to need to continue spending in order to keep this economy afloat. That is also a possibility as well. But I think this thesis that we have is sound. I think it's strong. But again, I wouldn't really put more than 1 or 2% risk on any of these specific trade ideas here. So guys, that's really going to wrap up this video here. If you did enjoy the analysis that I provided for you guys in this video, make sure you guys go down, hit that like button. Costs you nothing to do it. If you guys have any questions about what we covered, drop a comment down below. And for those of you guys that are interested in taking your trading to the next level, make sure you guys take advantage of that 50% off deal with code bullish. That is not going to be around for much longer. And after that, we're going to be going waitlist only. So you're not going to be able to get in. So team, I'll see you guys in the next one. Peace.